Well, thank you for inviting me back again to the webinar. We have a lot to go over, so let's get started. Hang on one second. I'm trying to, not sure why my slides aren't moving. Oh, there it is, a little delay. Okay, so really what we do at Sentiment Timing is we try to uh, predict how people are feeling about the market and when things are going to reverse. And we do that in a couple different ways. So the chart I'm showing you right now, this is just a regular S&P chart. And I'm going to show you regular, say, price setups and how people's emotions take control of them. So a regular price setup here would be once the S&P takes out this high, and this was on June 7th, that would trigger a long signal, and anybody that was short would then switch to the long side. Everything looks good going into this, but if you notice, coming back down to the September 14th of 3 months later, we're right back at the same price again. Support held, went up, the bulls still feel comfortable, and from there, 1013, we're right back to the same place. Then here we get the panic, and this is where emotions set in. So everybody that was long up here and happy, they are now panicking and now selling, and from there at 11.7, we are right back. If you took this trade here, you're right back to break even again. So it's basically 5 months that went where you went absolutely nowhere. What we try to do is, and we do it with pretty good accuracy, and I'll go over all this in the slides coming up, is predict when this reversal is going to the downside and when the low is going to be making, and we do that through a few different ways. I have a little delay in my. Let me see if this goes. There we go. Okay, so really what we do is we try to help our subscribers make better trading decisions. And the key to making money is putting the odds on your side. And sentiment allows you to be proactive instead of reactive in market reversals. Because there's you've heard of this saying, when too many people jump on one side of the ship's is gonna turn. It pretty much holds true with everything, and I'll go over this a little bit more, but so when you see how everybody is feeling about the market, if everybody is bullish, it's not the time to be following your what the financial TV stations or radio or newsletters are saying, because most of them are just following the trend, and that is typically going to be the wrong trade. You want to be looking to get long the market when everybody is bearish on the market, and you want to start looking for areas to either get short the market or place some very tight stops if everybody is bullish on the market. So no software or person is going to be 100% correct. So we have technical turn dates that Woody does, and again, I'll go over all this a little bit later, but they're not going to be 100% accurate, but we're able to back things up by let's say we have our technical turn dates, you have your sentiment, and then we also combine that with regular technical analysis. So there's a code that the market follows, but it's always changing, and Woody Dorsey has mastered this code to be able to predict when exactly the markets are going to reverse, or he's considered one of the best market timers in the world. So we're not a trading service where we're telling you to buy at this specific price or sell at this particular price. We're more giving you, what you should be looking for. Is it safe to be looking to buy the stock market? Should you be getting a little bit conservative on the long side? Should you place some tight stops, or should you be looking short? And in today's webinar, what we're going to go over is how we come up with all of these, how we come up with our turn dates and how we come up with sentiment, as well as, our regular trades. So who we are and what we do, we're a handful of services that actually tracks and charts investor sentiment. There's other services out there. Woody's been using his same sentiment data for 40 years. He's actually been considered a pioneer in the investor sentiment world. And it's something, investor sentiment is something that you don't trade off of alone. It has to be combined with other things, and that's what Woody has mastered in his 40 years of trading. I read his book, Behavioral Trading. It was amazing, and that's what kind of led me to call him up and try to start a retail version of his of what he did for some of the largest financial institutions in the world. So that's how we started sentiment timing. Now, the technical timing profiles. This is when he's able to predict when reversal dates are scheduled to hit the stock market, and it's usually weeks and sometimes months in advance. And the accuracy of his predictions are absolutely amazing. So, knowing when to expect either a low or a top to hit, you're able to control your emotions because you're not listening to the media. You're not listening to everybody saying that we're heading to 5,000 on the S&P. When you're looking and we have a technical turn date looking for a top, and you have sentiment readings that are extreme bullish, that's the recipe for a reversal to the downside. So one thing we do is we eliminate the long-term view of things. We have no interest in it. We believe that there's more money to be made in trading the S&P for anywhere from 5 to, let's say 1 week to 5 weeks, and that's usually about the cycles that go through. So the technical timing profiles is what gives us the dates to look for. Investor sentiment gives us the reason why we should be expecting that reversal on a particular date, and then we use regular technical analysis to determine where it's going to where things are going to reverse. And we do that just through bearish divergences, support resistance levels, and stuff like that. But when you have the three elements, and that would be when to expect it, which would be the technical timing indicators. Investor sentiment is why, and then you have the technical analysis to where. You have really all of the elements to be ahead of every say big market reversal. So Woody's been in business for over 35 years. Like I said, he's one of the best-selling authors of behavioral trading. He's been quoted in many of the financial newspapers. The USA actually has him labeled as a stock shrink. So he's well known on Wall Street, and like I said, he's considered by many as one of the best market timers in the world. And when I like I showed you in the first chart with the S&P during the June 2016 into November 2016, if you're not staying ahead of these reversals that are taking place, you're going to find yourself dead even, and in half the time you're not going to be long when a big move is happening, because that's usually going to take place when there's a panic low, and when there's a panic low, people's emotions take control and they sell everything, and then they wait to get back into the market waiting for a pullback. It continues higher, and what happens there is now you have the media and everybody talking the S&P 3000, 4000, and now you have investor sentiment that's at extremes as we approach a turn date. So that's when you want to start looking, on the downside. So Woody's worked with some of the largest financial institutions in the world, and still does through his institutional newsletter. And he's been featured on CNBC, Barron's, basically every single financial media outlet. So one of our, what we believe at Sentiment Timing is that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that is what creates the market opportunities. So Woody's proprietary sentiment database it's collected through daily pollings, which again I'll show you in a little bit, but it gives us how people are feeling about the market, and it's important to understand in trading as well in everyday life that the majority is always going to be wrong. And some examples that we can throw out right now that has just happened would be Brexit and Trump. And you know, the reason why the majority is usually always wrong is because nobody wants to step out on the other side. And you get the financial, you get media talking about it. Everybody's looking in the one direction, but when everybody's looking in one direction, there's a high percentage that the entire crowd is going to be on the wrong side. And it happens the same way in the stock market as well. When everybody's looking one way, it's, you know, you get the buyer's remorse, or people are exhausted of buying, and from there we get the big drop, and everybody's waiting for the bounce because they're used to the market just going straight up. And when it goes through support level, people panic, and then everybody sells at once, and from there, that's the buying opportunity. So these cycles repeat over and over, and when you learn the cycles, you learn to trade just like the pros do, because when sentiment is at extreme bullish levels, they're winding out of their long positions and starting to build a short position. And when you're in the panic level of things, or the extreme bearish readings, they're unloading their short positions and buying. And you have the retail, or the people not on the inside, that are trying to trade the middle part of it, and like I showed you in the other chart, 90% of the time you're breaking even on it, unless you're front running these reversals. So our market timing matrix, like I said, time, that's when to expect the reversal. Sentiment, or how traders feel about the current trend. So that's now backing up the actual timepiece when we're expecting the reversal either to the upside or the downside. So you have, if we're looking for obviously reversal to the downside, we would have expectations that sentiment would be at a extreme bullish readings, and from there we then want to use our price or technical analysis to determine where the price might reverse. So those are really the elements to how we kind of move our trades through sentiment timing, and it's time, sentiment, and price. All right, so what is sentiment? Sentiment is basically how traders feel about the stock market, and most technical indicators are derived by price, and I think we've seen that. Well, a few of the presenters today were going through those things, but it's basically based off of price. Sentiment is a measure of human emotions about the market, and one thing that I go over a lot when I do webinars or I do reports for our clients is that, emotions are what move the stock market. Price comes after, and what I mean by that is, if you are bullish on the market, or the majority, people are thinking that the market is going to go up, they're going to be buying. When more people are buying, obviously the price is going to go up. But there's going to get to a certain point when everybody is bullish, and then from there we get the drop. And everybody the majority, I should say, will stay kind of bullish on the market because things are going well. But once something happens, then they all get bearish at the same time. So when they don't think the market is going to go up, they're selling. So it's their emotions that are controlling the price. It's not price controlling emotions, even though price will control some emotions at some time. But overall, if you're able to see how other people are feeling about the stock market or the sentiment, and you're able to track that, I say it's like playing poker and being able to look at the people you're playing against, look at their cards. Because if you're sitting there and you're looking at sentiment, and everybody is expecting the market to go higher, you're simply going to be looking for a place to go short. But sentiment alone, like I said, is not a trade. It's you want to make sure that there's a technical timing reason for it to turn, and that's like what I was saying before. When you combine the three together, the technical timing dates, as well as the sentiment, and then just regular technical analysis, you get some really high percentage trades that work out in your favor month in and month out. All right, so let's move on here. So what I had said was Woody's been doing this for over 40 years, tracking investor sentiment. Now, the way he does it is he has what he calls listening posts, and he has about 100 of them that he follows, and from that, it's filtered out to thousands of sentiment sources. So all of these, they all get registered in, they all go into the computer system, and from there, this is how we track the sentiment. And he's been doing the same way for over 40 years. And like I said, it's one of the longest sentiment readings techniques, I should say, that's out there right now. So this is an example of a regular short-term sentiment chart, and this is what we provide our subscribers in our newsletter. And notice, you'll see as the market's going up, everybody's getting bullish on the market up here. When the market's down, everybody's bearish on the market. So you can see, like I said, this is not just a trade up by itself, but I'm just showing you the example of how things work out on this, where everybody's bullish at the top and everybody's bearish at the bottom. So this is an intermediate term sentiment chart. So this is a 10-day moving average, and you can see once we're at the extremes here, we get into extreme bullish sentiment, even though the market, this is heading down right here, and the market didn't go down right away, it stopped going up. And that's one of the most important pieces of the puzzle is, you don't want to be buying when everybody's up here, because, yeah, you may get some moves up in your direction, but it's going to be limited. And from there, you're then going to have to deal with the stress of it going down. Now, this is excuse me, a good example of a sentiment divergence, where you can see the market, the S&P was still kind of heading up here, but this was going down. So this is a sentiment divergence, which is very similar to a technical divergence, and something you don't want to be, going long when you see something like this happening. But each time we get down to these bottoms, if you notice this red line here, this was the black hole, which again I will go over in the coming slides. But this was a black hole low. These were bottoms that were made on 8/15 and 2/16, and you can see sentiment was all the way down. And then this is the Trump bottom. This is when everybody was getting bearish on the market. And what was the majority saying? They were saying that if Trump gets elected, that this market's going to crash. Again, majority was dead wrong. It's just the way things, how they work. I don't have an explanation on why the majority is always wrong, or they're always going to be on the wrong side, but it always happens that way. So technical timing profiles are when reversal dates are expected, like I said. Typical attention spans or trend durations repeat in the markets. And what do you use as a matrix of market timing technology to predict when the next reversal date is going to take place? So we know when to expect the next high. We've known it for the last 2 weeks. Our subscribers know when it's going to take place. So right now, everything in between it, it's not a time that if you go short, it would be for, you'd want to do it for a quick trade, but you want to be looking for the swing trade short when that top is going to be taking place. And that's what I mean by controlling your emotions and knowing when to be, getting aggressive on the short side, I should say, or just being very, running with a long position with tight stops. So the timing indicates they keep changing, but they will always repeat, and that's how Woody's able to predict when these reversals are going to be taking place in advance. So he developed profiles for when the market is likely to have a move in the opposite direction. So if we're moving up, then we're going to be looking at this technical time for the market to reverse down. When it's going down and there's a technical turn date, then we're going to be looking for the markets to go up. But there's no sure things. They're only probabilities, and that's something we really want to stress to people, is that this is not a foolproof system. It's a system that's going to be right more than just about any other service that's out there, but it's not something that you want to sit there, and if you have $25,000 in your trading account, and he says a low is going to take place on this date, you don't want to put 25,000 in. It's a probability, and that's all you use with it. But knowing when to expect the trend reversals, which is backed by investor sentiment, gives really us and all our followers an unfair advantage over any other market service, and that's it, because there's not many services that have they track their own investor sentiment and then have technical turn dates to back things up. Let me give you some examples of what is how we did this. So this is 8/4/2015. What you can see here is there's a potential for a trading target or a sell zone due on 8/14 to 8/21. This was on August 4th that this was put out. So this is our report, and it's telling people that it's telling our subscribers to expect a high between 8/14 and the 24th, and he calls it the kill zone. So we knew almost 2 weeks in advance when to expect a top. So let's now go to, come on. Okay, hang on one second. I got that delay again. Come on. Oh, here we go. Okay, so this is the sentiment reading when that report came out. So you can see everybody was bullish on the market as we were heading into that time period, and we knew the kill zone was coming. And if I just move to the next next chart, this is what happened. So this is the 8/4 report. This was the kill zone right here in this box right here. We knew we had sentiment. Everybody was looking up, and from here we had a complete collapse of the market. So again, time, we knew sentiment was reading it, and we also had bearish divergences, and we had the huge drop. So that's what I'm talking about: time, sentiment, and price, and how things work. So let me show you another example of how this all works. So on September 3rd, 2015, Woody had said that I expect high volatility around 9/17. September 17th, and then from there, momentum downside could gather momentum after the 23rd to the 25th. So this is the 9/17 was when he was looking for a top to come into play, and again, this is on September 3rd that we said this. So if we take a look, you can see that the sentiment was extremely high. This was, remember, this was I forget whatever he called it, but anyway, the kill zone, sorry, the kill zone drop. So here was the rally, and you can see we had bullish sentiment readings, even though we were nowhere near this high right here, and this was the date that he was looking for the market to drop. So if we go and take a look at it, here's the kill zone drop, here's the 17th, and from there the S&P dropped almost 70 points in about 7 days. So again, it's one of these things that we knew on the 3rd that on the 17th was going to be a top. We had sentiment that was backing it, and if we just look at a technical end of it, look how close we were to the moving average here. So everybody that was say bearish on the market, and we had this big drop right here, covered once we took out those highs, and everybody got long, and from there we had the big drop. So again, knowing in advance when to anticipate that the market was going to reverse allows you to control your emotions and not jump short when we have a big down move, because the top wasn't supposed to be coming until then. So what I want to do now is show you how I combine our my regular technical analysis with sentiment and the technical turn dates. So basically what, I use your just regular support resistance and technical divergences. So if I'm looking for support or resistance zones when the time is in line. So basically I'm following Woody's lead on this, where if he's looking for a low to take place at a certain time period, and we know sentiment is hitting extreme bearish levels, I'm going to be looking for support lines. I also want to see some technical divergences, and what that is let's just say the MACD. The MACD is moving, making higher lows as the S&P is making lower lows. That's a bullish divergence. A bearish divergence is when the S&P is making higher highs, and say the MACD is making lower highs. So that's a bearish divergence. So when you have the technical divergences that are matching up with, say, a resistance area, and then we also know there's a technical turn date that's pending in 4 days, and we're able to look at sentiment and see that it's at, you know, extreme bullish readings, where it's a very easy trade. And like I said, even if the technical turn date is off, the market's not going to go that much higher. It doesn't, because of a number of reasons. One, sentiment is going to be at the extremes on the bullish end of it, so everybody's already in the market. We know the technicals are weakening, so it's, even though you may be on the long side of a trade for a day or two, it's not going to be something that you're pulling your hair out, because you may see the S&P 4 or 5, maybe 10 points out of the on the wrong side of your trade, but within a day or two you see the S&P drop 40, 50 points, and that's really the way this market has been moving. It's moving at lightning speed. So if you're not anticipating when these markets are going to reverse, you're usually caught just selling with a 20, 30 point gap up or down. So here's an example of how we fit everything together here. So this was the black hole. That's one of the lows that Woody had showed on the sentiment chart. So this, he actually, believe it or not, called this black hole on 9/20 back in August, and said that this is when a top was expected. It was right on the exact time period that it was supposed to hit. Now, if you notice, the S&P is making higher highs, and you can see the MACD is making lower highs. So we had a technical divergence. Now, if we just drew this trend line, you can see it followed right into the trend line, and it hit right onto the exact turn date, and we had sentiment that was at extreme bullish readings, and from there the S&P had the largest drop that it saw from the entire bull market rally that started in 2009. Now, the black hole actually is when a low date is supposed to hit. So it was supposed to hit on 10/13. I think the low came on 10/14. Now, again, this was all done in August, so you knew the top and you knew the bottom, and this is what happened afterwards. So knowing when to expect these reversals, and as long as you know, we have technical backing as well as sentiment, it's not that hard to make the trades that are, let's say, a counter trend trade, because you're eventually in usually a very short time period, that trend is going to reverse to the position that you're in. So I'm going to give you another recent top. So I showed you ones from 2014, 15, but this was on August 9th, and what Woody had said, we were looking for declines, harsher declines, to hit after the 12th, and it could take place into the 15th. So again, it was only about a week's advance, a 1 week advance, but you still knew not to buy into you know, into the rally that was taking place. So if we come and take a look at what sentiment was doing, remember, everybody gets bullish on the market when it's heading up, and once we start seeing these series of bullish readings, notice how the S&P stopped going up. So the biggest point gain was here when everybody was bearish on the market, and then what happens is once we start taking out support resistance levels, everybody starts getting bullish on the market, and from there it goes up a little bit and then just kind of goes sideways. Well, here we knew that the technical turn date was coming. Everybody was bullish on the market, and if I show you the next slide, this was the 15th. This is when Woody had said that to expect the top between the 12th and the 15th, and the S&P dropped 100 points. So everybody that was bullish up here then got bearish down here, and this happened to be that right around that Trump low, and we already know what happened. We've had an explosion to the upside. So again, when you're able to know when to expect the the market to reverse, and then you're able to match it up with investor sentiment and then technical analysis, it's almost like trading with this super confidence, because you're not going to be on the wrong side. And there's also sometimes it is going to happen, but we know exactly where the stop should be, and a lot of that has to do with where a sentiment extreme was also, because the price shouldn't go below or above that sentiment extreme, and if it does, something else is going on and there's another cycle that's kicking in. So what I'd like to do, hopefully you guys had a pretty good idea of what we do and how we do it. I'd like to open up if you guys have any questions that I might be able to answer here. Just going to try to questions. Okay. So okay, I'm not sure. Confirm. I can't really see the questions right here. Renee, if you can see them, I'm not sure.
There's a little arrow next to where it says questions, and you should be able to pop out the questions box.
Oh, okay. Let me see some. Okay, here we go. All right, this isn't working. Let me see here. Yeah, I'm not able to pop it out. I'm not. I can say there's a tiny box I see. I don't see questions. All right, let me see if I'm sorry about this, folks. I'm not great with this particular thing. All right. Can you read them, or?
Yeah, I can do that. No problem.
If you can do that, yeah. I don't know how to do it. I'm not that familiar with this particular website.
Clark wants to know, do you have this in real time or EOD?
Well, basically, we put our reports out on Tuesdays and Thursdays, and a lot of people ask, why do we'll put updates out when something important takes place, but we really the turn dates that we have. I'll give you an example. I'll give you guys a free example. We're expecting some kind of top to hit on December 8th in that area right there. So we've known that for the last week. So there's only so many ways that we can say expect the top to come on December 8th. So what we do is we show our sentiment and all that. But like I said, Woody is a master of reading investor sentiment, and that's how he knows how to predict these technical time dates. So we put them out on Tuesday and Thursday, and it's usually during the day. So we put one out today that went out at like 11 o'clock. So everybody knows what sentiment is and what to expect, and that's pretty much what we put out in our reports is, if we're getting a pullback, don't expect it to be that deep, because we're probably going to have another pop higher into the December 8th time period. So that's going to be the time when we're looking to possibly do a swing trade to the short side. But it may be a very, very fast trade, but that doesn't make too much of a difference to me, because if I'm going to make 40, 50 points on the S&P in 3 or 5 days, I'm good with that. So it's end of day, but we put our reports out during the day, so that the sentiment readings are done end of day. Are there any other questions, Renee?
I do not see any. If you guys have any questions, please let us know, but that's the only one I see right now.
Okay, so let me just go 1 second here. Okay, this didn't come out right. I'm going to do this. Bear with me 1 second. I'm going to take this off of my thing. All right. So what we're doing, one thing that I want to just let you know that we're offering right now. It's what we call our no questions asked money back guarantee. And typically we charge $150 a month for our service, and we're making a special just for people that are in this webinar, and it's going to be $99.99 for the first 2 months. Of the sentiment timing reports, and then it moves to our normal $149.99. If you cancel within 2 weeks, we'll send you your money back, no questions asked. Now, if there's people that aren't really comfortable with doing a $99.99, we can give you and I'll give you my email address. You can do it for 2 weeks at no charge at all, but the only thing is that you're going to start getting charged $149.99 after the 2 weeks is up. But we can offer either one of them. Like I said, it's going to be we just put out a stock bond ratio chart, and what that basically does is Woody is using his 40 years experience to compare the stock market to the bond market, and it gives you a little bit of a longer term view of what should be taking place in the next 3 to 6 months. And it's a great report. We just sent that out to our subscribers. We also have a very interesting gold report that we're going to be including as well. So that's going to, we can't, for anybody who does the 2 weeks for free, unfortunately, the gold report you wouldn't be able to get, because we were actually selling that for $40, but giving it to paying subscribers. So if you do the $99.99, you're going to get both reports. But like I said, it's a no questions asked money back guarantee. If you do not like what we are providing, you ask for your money back, and we'll give it right back. And what you would want to do is just go to our website, which is sentimenttiming.com, and when you go into subscribe, you just put in the coupon code year end, and that will give you the $99.99 for 2 months. If you want to do the free 2-week trial, just send me an email at info@sentimenttiming.com. and I will send you a coupon code for that. And what we're also doing, it's an added feature, is as Renee mentioned earlier, I have another website. It's marketspath.com, and what I've basically done is just kind of converged everything together. And it's anybody who subscribes to Sentiment Timing, I'm just giving them a free subscription to that. And what we basically do on that is we do video reports to show what took place for the day. That's every single night. We have a nice little trading room that people are in there exchanging trade ideas, and I basically give morning notes just to give you a kind of prep for what to expect for the day. So that's another added bonus that we're giving away, and you'll get that for either the free trial that you do or the 2-month trial. But we have there's a lot of added bonuses that we typically don't throw in, that it just all happened to come together with these the last really month of the year. So we have some exciting times that are going to be coming. I expect volatility to start spiking around, and basically what everybody thinks they know is going to happen, typically the opposite is going to take place. And you have to really know exactly when to expect these lows and these highs, and adjust your portfolio accordingly, because the moves are happening really, really fast, and they're not giving anybody a chance to get in or out. And typically people are either getting stopped out or switching sides exactly where they got in. And by knowing, having somebody that's been doing this for over 40 years and considered one of the best market timers in the world, letting you know when to expect a reversal, it really is priceless. And That's why, you know, some of the largest financial institutions in the world are paying them tens of thousands of dollars for this information, and they've been paying them that much for, you know, a very, very long time. So it's something I try to relay to just regular retail traders, where you don't really understand the information that you're getting, because you got your JP Morgans, Goldman Sachs that are getting the institutional version of it, and it's a lot of it is very similar, because I get that one as well. So if you guys are interested, like I said, this is the they use coupon code year end. Just go to sentimenttiming.com. If you want the 2-week free trial, just send us an email at info@sentimenttiming.com, and I will send you the coupon code.